Hello, welcome to episode number 35 of Daily Market Mastery with me, popular investor Christian Rauchenwald. As always, in Daily Market Mastery, we use the Elliott Wave principle or Elliott Wave theory to try to predict future movements in stocks and indices, and therefore give you an insight into how and why I'm doing certain things in my eToro popular investor portfolio that you can, by the way, check out by using the link that you can see here. That's also pinned in the chat and in the video/stream description down below. Now, before we jump into it, first of all, everything that I'm using, so the software that I'm using for labeling, the book, a way to read the book online for free, the one-page cheat sheet that I'm using, and everything else is linked in the description below if you want to dive into Elliott Wave Theory yourself. And secondly, as always, everything that I share in this live stream/video, depending if you're watching it live right now or as a recording later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Because after all, I'm just sharing you what and why I am doing certain things. That doesn't mean that it's right for you. And if you follow the link that I showed earlier to check out my portfolio and my track record, and you don't agree with or let's say, and my portfolio performance doesn't fit your investment horizon and risk appetite, well, then you can still check out other popular investors on eToro and potentially find one that suits your requirements as said better. That said, let's jump into it and look at the upcoming earnings events that we have. Today, GameStop will release their earnings. We already have an episode about GameStop. I don't have it handy right now, or do I? It's episode number episode number 9 was about GameStop, and I think we didn't dive into it. But yeah, looking at it, we assume that on the biggest degree we have the end of wave 4 and are now basically going up. And if this here would be 1, 2 or 1, 2 in some way of shape or form, so 1, 2, 3, 4, and 5 in progress, they would actually expect decent earnings. So like, there are actually 2 options. So like, if we look at this, wrong direction, that here could be 1, 2, 3, 4, 5 with an extended 5th wave, or 5 here, and then it would be, no, that would be too short. So 5 and with either an extended 3rd or an extended 5th, but probably that's 3, 4, and then we have here 1, 2, 3, 4, 5 for the 5th wave. So that one, and then that would make that here wave 2 potentially, and which means then this here 1, 2, 3 long 4th wave, and 5 in progress. 5 could theoretically already be finished here, although we lack a very strong movement. Why could it be finished? Because wave 5 will usually, or at least recover 70% of wave 4. Often or usually you would have a new high, but again, minimum would be 70%, and roughly we ballpark we have that, which means we could either have bad earnings, and even on good earnings, we saw GameStop drop already, yeah, like not gonna get into why and whatnot, but we can either have bad earnings or good earnings, and then see, because this here would make up a wave 1, 2, 3, 4, and if that's 5, then this would make up wave 5, and we would then see a wave 2, which would take us, so then it would be 1, 2, would take us round down here again to what we have here, $18.06 roughly. And alternatively, we have good earnings and it finishes up that this week really is wave 5 finishing, then we would roughly, let's use a channel, so Kennedy channeling technique, so 0.4, or our potential 0.4, 0.2, parallel through 0.3. So yeah, I mean, one profit target we almost barely touched. What was the median here? The other one would be the top here. Obviously not going to happen in a day, but again, like if we have good earnings, we would probably potentially touch the area here, which would be, I don't know what, where we are, like 27. So yeah, like make it up here, potentially higher. We'll see how it goes. Yeah. Either way, long-term bullish, as long as we don't go below the 0.4 here of $15.41, which would invalidate that wave 4. But to be fair, considering how long that corrective pattern already lasted, yeah, I think that's now done. Like, we spent quite a lot of time when I started that YouTube channel, actually, real-time labeling everything from here till eventually here or so. Until then, it was like became really challenging, and I really had trouble coming up with a wave pattern that makes sense. I still would have trouble, to be honest, to label this here, because it would need to be a very complex corrective pattern if it follows Elliott Wave Theory. Yeah. But overall, like, the look here is something I can live with right now. Anyway, GameStop, not the topic of the day. Just wanted to show that they have their earnings today, so we expect some movement, hopefully in our favor. And we are looking for something else to look at. NEO, we already looked at in episode number 21, so I'm not going to look at, do we still have NEO open? NEO, we actually are saying, okay, we potentially expect wave 4. Yeah, I don't know where that wave 4 line went. So 1, 2, 3. So we basically still would need a breakout from the deceleration channel here to confirm that we're in wave 5. Therefore, 1, 2, 3, 4, 5. Now that won't check out because we don't have the breakout here. So 1, 2, 3, 4. Very long fourth wave. Also similar to GameStop with like very long fourth wave. And we have our stop loss here at 5, 6. I think we have a position in NEO right now. Let's check on my end. Yeah, we have a position. Our stop loss is obviously here where this would get invalid. So there's still a little bit room down, but potentially eventually we should have the end of that fourth wave and then start at 1, 2, 3, 4, 5. That again should recover 70% of this, but potentially build a new high. Here, the so-called destination channel would be 0.2. 0.4, yeah, 0.4 if it would be this low, yeah, parallel to 0.3. So it would be that median here or the top here. Yeah, we'll see how it goes. Obviously, again, long term, it's not going to shoot up in a day. And yeah, like, have to see how it plays out. But yeah, risk-reward ratio great, and overall the labeling is also okay or solid. We looked at Goldman Sachs, we looked at IEP. In fact, yesterday we actually open a position in IEP based on our labeling. IEP. So assuming that this is ABC, now the correction is finished. In our original review in episode number, actually I have to take a note. Yesterday was episode number, what did we have? Sorry, IEP. Yesterday was episode number 32. And it was the 6th. 2023, oops, 2023, and episode number 32, and we basically, yeah, expect wave 3 now. So in our original review, we used TradingView, and there we had a low, like a data fluke that showed a low at $10. So the original review expected that we might drop further. But in overall outlook, we actually are now quite happy with how things develop, because we have the 1, 2, we have the 61.8 retracement. It's the area of wave 4. So that would mark multiple reasons why we have a turnaround here for our now third wave that will slowly play out 1, 2, 3, 4, 5, and eventually should obviously get us higher than the previous all-time high. It's going to be interesting, especially considering the, in quotes, accusation from Hindenburg Research against IEP, how their earnings going to look like, and what kind of no, dividend day was already or is on another time. But yeah, we're going to be interesting to see if they're still at a loss or if they're actually profitable now. Moving to July, so there we have, oh, that was actually dividend payment, sorry, not earnings. So there will be dividends paid, nice. Although our position was probably open too late before the dividend cutoff date, so we're not going to get dividends this time, pity, but yeah. Then we have Goldman Sachs earnings, actually, which we looked at in episode 26. We have Ford, which we looked at in episode number 8. And then we have Black Knight Inc., which we looked at, and then IEP actually in July as well. So buckle up, yeah. And with that, we already get into August. We have Disney, which we looked at in episode number, where's Disney? Episode number 18. We have Domo, which we looked at in episode number 12. And bringing us to September, where there are no reported earnings for stocks traded on eToro, and October, or we just don't have the dates yet. That makes it, is there nothing? Okay, so they just don't have the calendar updated. So we don't know though. Okay, which makes it tricky what to pick to look at now. So we just looked at IEP yesterday again. Yeah, so we don't look at that again. We looked at NEO that last time in a month ago, or less than a month ago, so like 3 weeks ago, in Neo. Yeah, we had that. So we're waiting for wave 4 to finish. We're not sure where it might finish, but that 61.8 retracement aligns very well with this here. So we might actually have a turnaround slightly before that. Okay, so Neo we don't have to dive into again. Now, GameStop, again, we looked at. So that's not going to be our choice. Goldman Sachs, we just looked at like a week ago or two. And our position is actually right now at a small profit. We'll see how that develops. What's the oldest SPA? Shopify. Shopify. Do we currently again have a Shopify position? No. So let's use a couple minutes to look at Shopify. And there we actually are looking like this and expecting that our wave 2 will take us down here, which would happen if this here turns out to be up. No, not what are you doing? That doesn't make sense. F5, fix this. Yeah. Yeah, I don't know why it does that, because that's not valid, but let's adjust the labels here and then manually do it. So if this were A, B, C, then obviously we would have to move further forward. But actually we would expect, as usual, to get into this area here. So horizontal line. My notes for Shopify that we had an episode re-entry around 35 to 45. So what, 35, 45? Am I missing something on the bigger scale? No. So Ah, 35 from the 61.8 retracement. Yeah, and I was a little confused for a second. Yeah, but if that actually is, so like we can see here, 1, 2, 3, 4, 5, or yeah, 1, 2, 3, 4. No, it has to be 1, 2, 3, 4, 5, and then here potentially A, B, C, or something in that way. Then we have a 1, 2, 3, 4, 5, A, B, C. Yeah, I mean here we probably have the combinative. So like multiple W, X, Y, so which is then A, B, C, something, it doesn't matter. Like we could look at it closer, but it's not really relevant or that relevant. So 1, 2, 3, 4, 5, and now we would have wave 2 that gets us at least down to the 38.2 retracement, but very often to the 0.4 of the impulse wave of a lower degree, of the previous impulse wave of a lower degree, which would be that 0.4, which aligns with the 50% retracement, which means here we are waiting for 40. Now, that ABC here doesn't have to be like that, because an ABC always consists of an impulse, another corrective pattern, and another impulse, which means this could be 1, 2, 3, 4, 5, and then we have wave B, A, B, C, and then we have 1, 2, 3, 4, 5 that takes us down there. So in other words, we'll have to wait a little longer to see that happen, if it happens. If we go higher than 65.54, then our labeling is wrong. And we would have to consider where did we get it wrong. However, that said, I'm going to look in the history for a second. So Shopify we bought at 45.86. So we bought it around 45, around here, and we bought on the 16th of February, which was a while back, so should be here-ish. Yeah, so we bought around here. Here, yeah, or like, yeah, like the candles here are 2 days, so it's a little confusing, but we bought around here in February at 45, and then we bought at 46 in where's the opening date, on the 30th, so 30th of March. So again, around here or here, yeah, so here-ish. And so basically on the same level, we bought twice, and then we actually made the journey up here, and we sold at 22nd. Yeah, we missed the selling a little bit. We sold here at 61.92. So not too bad. The high was at 65, so it's not that we sold exactly at the high. And now, obviously, right now we would be higher again. The close is a little higher, so we could have waited out that and would be at the same point. But again, the expectation that I currently have is that this is wave 5 finished, which means we now have to see a retracement that at least in most cases should get close to 38.2, which means we would be able to re-enter where we entered in the first place, so around 45, but potentially actually 40 would be the mark we're aiming for, and worst case at 35 we would really load up. But yeah, so far about Shopify, so we'll have to see how it goes. Overall, I'm long-term bullish in Shopify. So question is just if we timed that here right, or if we should have just waited it out. We'll see how that goes. Now, back to here and earnings. And so Shopify, no, positions, no, wait, NEO, GameStop, NEO, Goldman Sachs, we just looked at, we were checking what's the oldest stuff that we have. Now, Black Knight Inc., we have a position that's currently at a loss, and we have it since we looked at it in 3rd of April, so pretty much 2 months ago. Time flies, really crazy. Yeah. So Black Knight Inc., and they're not much changed. I mean, we thought that this here is 0.2, and it can still be. Although, to be fair, looking at this pattern here, it looks more like a corrective pattern. And 1, 2, 3, 4, 5. I mean, that's a 5-wave move. 1, 2, 3, 4, 5. That's a 5-wave move. That's 1, 2, 3, 4. Yeah, that's probably more like an ABC 3-wave move. ABC 3-wave move. Yeah, so that actually checks out very well as an ABC corrective pattern. The question is, does it finish? So is that all there is to that corrective pattern, or will that actually be WXY? In which case, we probably still shouldn't have a new low, so we should still be good. And if we look here, 50.01 was the low here, and that here is at 52. So technically, we're also in the perfect area already for a turnaround. So it just seems like that corrective pattern hasn't finished yet. Now the question will be, when will it finish? Maybe it finished here, so officially. And then we would go up from here, and we would have to adjust the labeling. But yeah, like, so there is not much we can do here other than wait, which is, it's most of the part of investing. It's like most of it is waiting. It's not like get rich in 5 minutes, but it's really waiting, which means looking at things, using your strategy. In my case, it's Elliott Wave Theory. In other cases, you might use a different strategy, and then following that strategy. And when your strategy tells you, okay, that's a position that likely is going to work out, there is never 100%, but then it's about waiting and looking if things change. And luckily with Elliott Wave Theory, things rarely change unless I mislabeled something and then notice, okay, that just isn't valid anymore, in which case we usually already hit our stop loss, which limits our risk, whereas our reward usually is very high when we are right. So if we're looking at this here, our potential reward would be a new all-time high, whereas our risk is relatively limited with the stop loss at 52. Now we could be a little bit more generous and put the stop loss theoretically at 50.01, but to be fair, if we say this is our 0.2, then this is our 0.2, and if we reach that, then it's not, and we should close it. Yeah. ABC, or 1, 2, 3, 4, 5. That's a 5-wave move, and then here, yeah, I'm not sure what that corrective pattern is going to be. So if it's still part of the corrective pattern, because there we clearly have a 1, 2, 3, 4, 5-wave move, which is okay, because overall, which would actually indicate that we still are in wave 2, to be honest. So while this might be the low point of wave 2, but in general, moves that are in the overall direction, which right now, since we're in a wave 2, the overall direction is down, divide in 3 waves. I mean, there are some exceptions as usual, but they divide in 3 waves, whereas moves that are counter trend, and again, right now wave 2 would be downwards, and moves that are counter trend would be dividing into 5 waves. Although on the other hand, we also know, again, there are exceptions, like in a zigzag, while the whole zigzag divides in a 3-wave pattern, or the whole zigzag is a 3-wave pattern, it divides then into a 5-wave impulse or leading diagonal, another corrective pattern, so another 3-wave pattern, and then another 5-wave impulse or ending diagonal. Yeah, so it's like, yeah, if we're able to count here 1, 2, 3, 4, 5 and say it's wave C, then technically we should also be able to count here 1, 2, 3, 4, 5 and say it's either, I don't know, wave 1 of the 3rd wave, so 1, 2, yeah, or wave X of WXY. Yeah, we'll just have to wait and see. yeah, I think let's look further. What else do we have? So we have Black Knight Inc. Ford we looked also in April. We're right now in a slight profit. Yeah, Ford actually played out very nicely. I mean, to be fair, we entered at, I don't see anything wrong, portfolio Ford. So we have one position in Ford and we entered at 1264 on the 16th of February. So our entry was relatively early, 1264, 16th of February should be somewhere here-ish. Yeah. So we entered here-ish. Not sure if we already had it labeled like that back then. Would have to check out the episode number 8 for that. Yeah. But overall, it looks like here we have a combinative corrective pattern. And again, we see that our point C is 1060. So our point W is 1061, where our point, like no lower point is here. So although our wave 2 ends here, that was actually our low point. And then we have WXY, so with a zigzag or some other form of free wave corrective pattern, a wave X, and then a contracting triangle that actually finished here after wave A, apparently. And now, on a very, very small scale, so again, each wave consists of other waves, but if we look on a very, very small scale, we can already see more or less like, what do we have as low point here? The low here is 1124, and here it's 1125. Interesting, yeah. But theoretically, that could already be 1, 2, 3, 4, 5. And now we would get a drop again to 1184. And then 2, 3. I mean, 3 will not go that far, but 3, 4, 5, and that will make up wave 1, and then we will go down a little bit again and so on. So we'll have to see how that plays out. Yeah, that also shows you that theoretically you could also use Elliott Wave Theory on lower time frames. It just becomes harder because you have to work your way down. You cannot just randomly jump into the chart and say, oh, there's a 1, 2, 3, 4, 5, I'm going to buy now. But you have to also, or you should ideally know what's the bigger degrees, so you know what you're looking for. And yeah, like here our bigger degrees that we're in wave 3, and right now at the start of a wave 3 that is part of a bigger wave 3. Yeah, like so actually relatively bullish. So we should have 1, 2, 3, 4, 5. I mean, overall play out on a bigger scale, relatively, yeah, like that should be a relatively nice trade. I don't know why Ford is going to behave like this, but I'm relatively or reasonably certain that it will. And that it will get a new all-time high. Or is it an all-time high? Did we have a previous high? No. Yeah. So it is actually, there would be a higher high back in, yeah, the 2000s. But we are labeling from here because of, yeah, like that's the recent low that we have. So if our labeling is correct, we should actually get like a decent profit out of this, like a couple 100% over the next couple of years. We'll see. We'll keep an eye how that develops. So because if it develops the way we think, so if this now develops in a reasonable, easy to recognize 1, 2, 3, 4, 5, we would definitely then wait for the corrective wave 2 and then double down. Then definitely double down, because then we would be in a wave 3, off a wave 3, off a wave 3. So we would have like very, very strong movement to expect overall. Yeah, but that's about Ford. So not much changed other than that. When we made the episode, again, it was on the 4th of April. And again, 4th of April was, no, here somewhere, April 4th. So here in wave C, no, March. So here, yeah, like here-ish. That's when we made the episode and said, okay, that looks like a contracting triangle. I think initially I thought this might be point D already, but it turned out that it went a little higher. And then we had, but anyway, we were expecting point D and E. Should have waited with the open, to be fair. Like instead of opening here, I probably should have said, okay, then let's wait if we see a point D, or set a pending order that is a little above what we had the low of point C. Yeah, didn't do that. My mistake overall. In the long run, shouldn't matter. And yeah, like so that so far played out the way we expected it. Now the question is if the future will play out as well, and to confirm our overall labeling. Yeah, and yeah, now what else do we have? We have obviously Ford. We have Domo, which is a month ago, so we can check at Domo. On Domo, the expectation would be that we're in a third wave and reach more than $20 or so. Let's check how we're doing. Yeah, so those wave patterns obviously need to be moved. So 3, 4, 5. And that retracement here was to show Oh no, that's an extension for the profit target, so which would be the $20 mark here for 138.2, or then 161.8, or then 261.8. So we'll see how far you go. But yeah, so far on first glance, I will zoom in a second, but looking at the gap here, I would say that is 1, 2, 3. And now we would expect soonish wave 4. Now, if we go to a daily chart, it becomes a little bit easier. We might even have to go closer, but let's throw a Fibonacci retracement there just to see. Yeah, we retrace a little bit more than 38.2 here. So, and if we, let's go further, like for the last couple of minutes real quick. So let's say 4-hour chart. If that were to be labeled, then we would label it like this. We would say, okay, this here is, yeah, I hardly can pick the point, but this here is 1, 2, potentially 3, 4, 5, or 1. Can I? We need a smaller chart. We need hourly. Hourly. Yeah, still hard here. So, but if this is 1, 2, 3, 4, could be relatively long wave 4, or 1, 2, 3, but then 3 would be the shortest. That doesn't check out. So let's see what the auto labeling does here if we throw it on the chart. It says like this. Okay, that's wave 3 in progress, and then we would have here 1, 2, 1, 2. Yeah, like hard to subdivide this. We would have to look even closer. A, B, C. Yeah, 1, 2, 3. So yeah, my point is that the gap up should be a wave 3 because it's a strong movement. And if that were the case, then we put the high here. And we actually, using Kennedy channeling technique to have our confirmation that we're now in wave 4, would wait for a breakout to the bottom. So basically here, now if it's a perfect wave pattern, we might not see a breakout because there are super nice patterns where it's really a trend channel and you have the 5 waves in there. Yeah. So we would wait to see 0, 1, 2, 3, 4. Breakout not possible because we cannot go unless it's a leading diagonal. Otherwise, we could not go below the 1373, and would have to check this, how that subdivides, and would have to check how that 1, 2, 3, 4. Technically, we should go down to here, which is 1381, which would be slightly higher than 3073. So, and if we go to 1381, let's get a horizontal trend line here. So 1381 was this one, yeah. That's 3077. That also works, yeah, because it's still 1373. So yeah, that would be like where we could go, and which means we might in Domo see a little bit of uptake, and then a wave C taking us down here to finish that wave 4, and then we have a 5th wave, and then we have basically another corrective pattern that takes us then down here again to finish wave 2, or whatever that wave degree is right now, and then we take it from there. Now I'm going to zoom out here. We're actually going to get rid of the labeling that we added here because we're looking at it on the bigger scale. Not chart, 2-day, there's our 2-day chart. Yeah, so basically we think that that's 1, 2, 3. Now potentially 3 might be finished here, 4, 5, and then that's 1, 2, 3, 4, 5 that eventually takes us higher than this channel here. So yeah, the next couple of what do we have here, yeah, like the next month will be interesting. Within the next 2, we should potentially be out of that channel, and with that already have like a decent profit on that position. Until then, obviously, since we just recently entered the position, we might have a temporary drawdown, a temporary loss along the way. And in Domo also, we had the profit that we took or not. I think we bought here, sold here, and then actually re-entered here because we thought that might be already ABC, because obviously this wave 2 went way further than usual. So we bought around here-ish. Again, that's why our Domo position right now should be at a loss or break even, slightly profit, yeah. So, but yeah, like that corrective pattern probably also something else, could be A, B, or WX. Yeah, that doesn't check out as Y, yeah. Have to keep an eye on it, but overall, yeah, still bullish on Domo as well. And yeah, I think with that, we can sum up today. So unfortunately, there's nothing new to look at, but we looked at some of the things that we've labeled in the past. We saw that in some cases, like in IEP, our assessment was correct, and we now enter the position. In Shopify, we're still waiting. In where else were we? What else was like? Not like in Ford, our assessment also was super accurate so far, and with the breakout at Wave E, and we'll now. Like in the others, we're still in a waiting position to actually get confirmation that we are right. But yeah, so we'll just keep going like this. And yeah, if you have any questions, you can always leave them in the comments down below, or as always, you can follow the link to my eToro portfolio and then there just leave them on one of my recent posts. I hope this stream helped you understand a little bit better of why I'm doing certain things and understand how Elliott Wave Theory works. As mentioned, you can, you can always use the link in the description down below to read the Elliott Wave Principle book for free. It's really worth a read, in my opinion, online, or order a physical copy from Elliott Wave International, so elliottwave.com. And yeah, that's it. So thanks for tuning in. See you all with another episode tomorrow. Yeah, tomorrow is also, there's Thursday. We also have an episode. So have a great day. Till then.